Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. So let's go back to the euro currency. You can see market shows relatively low dynamic in the recent few sessions. So the reaction on the Fed statement has happened. As we said, we think that it's not quite dovish and not absolutely bearish for the dollar, and you can see that indeed in recent few sessions as dollar has turned slightly stronger. So here's markets forming some consolidation in general. If we recall that we have the weekly stretch pattern as bearish stretch, theoretically this background exists for a possible deeper retracement, because on the weekly chart you could see that reaction on the overbought starts, and it's just the beginning. So since this is the weekly time frame, overall stretch suggests slightly deeper action or longer standing to the flat to adjust the ultimate overbought level. So market, the task of the stretch actually, and the background for the stretch is the abandoning and normalizing the overbought conditions. It could happen in two ways: either relatively fast downside action or longer term sideways action. In this case, since the overbought is in the general overbought result is a dynamic parameter, so it will have approximately the equal meaning. So by now, by Jordan approach, it's suggested that once market reached the middle area between the overbought and the result, stretch is done. So for now, you consider the retracement might be somewhere to the 106.40 probably, if we just take a look also on the next week. On the daily chart, this is, you can see the support cluster that we already talked about. But at the same time, currently we see that overall price action stands relatively flat, slow, and confidence that this really will happen currently, well, not very significant. So in general, it might be even some kind of the consolidations forming on the euro currency here. We will see what we could do in the current circumstances. First of all, let's take a look at the fall time frame chart. Here we have a kind of the double top pattern. This is a kind of the wash and rinse on the top, and if it will work properly, the target will be equal to the distance between the neckline and the top, counting down. You can see that's approximately around 107.25, first fib support. The major question is what the chances that market really will show the downside breakout and this pattern will start working. This is the major question. Divergence also stands in place here, you could see. Since this is actually the major risk that, for example, downside breakout could not happen and market will just remain in the consolidation that I shows you in here on the daily chart, showing some sideways action and then keep going higher. This is also possible. And that tells us that we could use only, in the current circumstances, only actually one tool for possessing on the bearish side. Because you already either have position to the downside, since we talked about this in the previous couple of sessions. If you have it, you could move stops to the break-even and see what will happen. If you do not have it, but you would like to sell, the only way how you could do this in the current circumstances is using stop selling order below these lows. So trying to come aboard in the moment when the market will breaking it down. That simultaneously will confirm the bearish ambitions of the market, that it's keep trying to go lower, and at the same time you will not have the big risk of the possible too significant upward action, so you will not need to hide the stops too far, not need to place it above this area. Alternatively, At the first glance, it seems that we could wait a bit more, waiting when the market will flirt around this area with a pull back to the upside and trying to take the short position closer to the top. But this is not quite correct, by the simple reason. Here as we have a kind of the preparation for the bearish action, double top with the Russian rinse here. And the double top should start working. And if you will see that it is not working and market returning back to the top, that definitely will be not the bearish type of action. In the current circumstances, I would better to start watching for bullish positions rather than bearish. It's just to confirm that market stands in a consolidation and it's not a preparation for a deeper retracement. Consequently, taking it all together, you see that in the current circumstances, bears have only one chance. Either it will be downside breakout or bearish context will be significantly weaker and maybe will be cancelled a bit later. So as a bottom line, if you have bearish positions, you could keep it for this break-even stops. If you're taking it somewhere in this pullback that we discussed, and actually maybe even on the top. If you do not have it but want to sell, probably you will have to use the stop sell order below the market. That's the only things that we have currently. For taking the long position, I think that we need to get a bit more bullish signs in a way as just have described. So with this possible return back close to the top, that might confirm that market indeed is preparing for challenge the previous high and continue upward action. But we do not have it yet, so that's why currently, especially with the bearish stretch valid on the weekly chart, I think that it will be better to not hurry up with taking any longs. So let's just stay watching for a couple of sessions, see what will happen.